Tesla turmoil picking up speed after another bearish note from Wall Street. This time it was Citi saying $36 is the worst case scenario for the stock. Tesla's now on track for its worst month in more than a year.
In 2018, Tesla clawed their way out of production hell and hit profitability. In 2019, Tesla makes major progress on multiple fronts, and yet the stock goes into free fall. Wait, how the heck does that even make sense? Well, it doesn't. But that's what makes 2019 such a fascinating story. And we start the year with some good news coming out of China.
Breaking ground on its first factory outside of the United States, Tesla is looking to churn out its first mass-market electric vehicle from China. Tesla says it's aiming to complete the initial construction of the plant by the summer and begin manufacturing by the end of the year.
We're actually very excited and optimistic that we can set a new Tesla record for construction and make a beautiful, sustainable factory that is our most advanced Tesla Gigafactory in the world, and do so in the fastest period of time than we've ever built a Gigafactory.
And the good news didn't end there, as Tesla soon reported their second consecutive GAAP profit in Q4 of 2018.
We have the Tesla earnings for the fourth quarter. Let me run down them. We have earnings per share of $1.93. Revenue coming in slightly better than expected at $7.23 billion. Cash on hand has increased by just over $700 million to $3.7 billion.
The bump in cash on hand was significant to Tesla, as they had a $920 million debt payment to make at the start of March. And if the stock was over $359, Tesla could pay out the bondholders in stock. If not, Tesla would have to pay out the $920 million in cash. But back to earnings, and while 2 consecutive profitable quarters seemed like a positive, the doubters weren't impressed.
I believe that Q4 was the best it will ever get for Tesla. Specifically, if you look at their guidance, they guided for a midpoint of 280,000 Model 3s in 2019. That was about 20% below the street consensus of 330. I believe demand for all Teslas fell off of a cliff starting January 1st because of the partial tax credit expiry of $3,750.
Following earnings, Tesla made an important acquisition.
Some news involving Tesla coming out just moments ago. The automaker announcing the acquisition of energy solutions provider Maxwell Technologies in an all-stock transaction. That this is a pretty small market cap company, $140 million.
They make ultra capacitors as part of the battery process.
It was super obvious that the media had no idea that Maxwell Technologies specialized in dry battery electrode technologies that would allow Tesla to someday manufacture batteries with higher energy density at lower costs.
I'm assuming part of this is a patent portfolio that they have in terms of batteries and energy.
That it's an all-stock deal.
But, you know,
the company's got some other bills to pay with the cash that they have.
That is true.
On February 19th, Elon tweeted that Tesla would make 500,000 vehicles in 2019, which was up from previous guidance of around 360 to 400,000. Elon then corrected himself, stating that the 500,000 mark was an annualized rate at the end of 2019.
Tesla's CEO is in hot water once again with the Securities and Exchange Commission, and investors aren't too happy about it. We've got shares of Tesla lower by nearly 3% in the pre-market. That's because regulators are asking a federal judge to hold Musk in contempt for tweets last week, saying the company would make around 500,000 cars in 2019. That was a tweet that was quickly corrected by Musk. The SEC says Musk did not ask for pre-approval as required under his settlement for that now infamous tweet about taking the company private.
So while the SEC and Elon Musk square off for battle once again, in mid-March, Tesla was ready to unveil the highly anticipated Model Y.
Tesla will unveil the Model Y later today. Production is slated to begin in 2020. This is a highly anticipated Tesla event for all the Musk fanboys. Its design is largely based on the Model 3, the company's most affordable car, but Elon Musk has said that the Y will be 10% bigger and 10% more expensive.
Tesla stock was up in the week leading up to the unveiling event, going from $278 to $293. So will expectations be met? Will there be any surprises?
Great outfit. Well, everyone, welcome to the Tesla Design Studio, where we've held many product unveilings before.
Elon starts off the event by recapping Tesla's history bringing out the initial Roadster, followed by the S, X, and Model 3. And then vehicles that were in the pipeline, like the second generation Roadster and the Tesla Semi.
So after that extended history lesson, what about the actual reason you came? Okay. There's a missing car. It starts with a Y, ends with a Y, and that's Y in the middle. They bring out the Model Y. All right. The Model Y. Yeah. Expect to have is 3.5 seconds 0 to 60, and very low center of gravity, so great handling. It's testing out at a 0.23 drag coefficient, which is extremely good for an SUV. And in terms of range, 300 miles. Yeah. So it's going to have a panoramic glass roof. It really feels like, just like the Model 3, if you're in the car, it just feels like you can see the sky. Seat 7, 66 cubic feet. Obviously autopilot, and the basically long range one we expect to be about $47,000, and then sometime in 2021 we'll have the sort of standard version, which will have a $39,000 price point. Yeah, I think it'll probably sell. I think we'll probably do more Model Ys than S, X, and 3 combined, most likely. So there you have the sexy presentation. So we are bringing sexy back quite literally. All right, thank you.
The media reaction was as expected.
Anything surprising in this? Is it as exciting as previous rollouts for Elon Musk?
Well, we viewed the rollout as a bit of a disappointment.
2 weeks later, Tesla reports quarterly deliveries for Q1 of 2019. Analysts were expecting 76,000, and the numbers came in at 63. When the news broke, Tesla stock fell by about 10%. For the short sellers, this was proof that Tesla had run out of demand and felt justified with their short position. What they failed to realize was that many of the newly built Model 3s were being exported from the Fremont factory to Europe for the first time, and a large number of those vehicles didn't get delivered in Q1. On the following day, Elon was at court to battle the SEC.
Meantime, federal court judge Allison Nathan giving Musk and the SEC 2 weeks to resolve their dispute over whether Musk's tweets violated a settlement agreement.
Very impressed with Judge Nathan. Judge Nathan's just I think, an outstanding representative of the judiciary. Very impressive. Their arguments were excellent.
Do you think you can work this out with the SEC over the next 2 weeks?
Most likely.
The quote making the rounds today is "Put your reasonable pants on."
Yeah, I never actually heard SpongeBob SquarePants be invoked in a federal court. This was an incredible embarrassment for the SEC. Did not see this coming.
Following the court case, there was some bad news that came out of China.
In the meantime, Tesla says that it has sent a team to investigate a video that appears to show the explosion of one of its cars parked in a garage in China. The video was posted on Twitter, but has not been independently verified by CNBC. As you can see, it started with smoking and then an explosion. Shows that smoke coming from the hood of a Tesla that's parked in the garage, and then the car bursting into flames.
On the 22nd of April, Tesla held an event to show the progress of their full self-driving technology.
So these are two independent computers that boot up and run their own operating system.
I mean, the general principle here is that any part of this could fail and the car will keep driving. So you could have cameras fail, you could have power circuits fail, you could have one of the Tesla full self-driving computer chips fail, car keeps driving. The probability of this computer failing is substantially lower than somebody losing consciousness. That's the key metric, at least an order of magnitude.
And using all 4 accelerators, we can get 2,300 frames per second processed. So a factor of 21.
I think this is perhaps the most significant slide. It's night and day.
I've never worked on a project where the performance increase was more than 3. So this was pretty fun. If you compare it to, say, NVIDIA's Drive Xavier solution, a single chip delivers 21 teraops. Our full self-driving computer with 2 chips is 144 teraops.
At first, it seems improbable. How could it be that Tesla, who has never designed a chip before, would design the best chip in the world? But that is objectively what has occurred. Not best by a small margin, best by a huge margin. It's in the cars right now. All Teslas being produced right now have this computer. I mean, the crazy thing is, the network is predicting paths it can't even see with incredibly high accuracy. It can't see around the corner, but it's saying the probability of that curve is extremely high, so that's the path. And it nails it. LiDAR is a fool's errand, and anyone relying on LiDAR is doomed. Expensive sensors that are unnecessary. If you buy a car that does not have the hardware necessary for full self-driving, it is like buying a horse. And the only car that has the hardware necessary for full self-driving is a Tesla.
Following the event, Tesla stock was down, while the media was absolutely clueless to what they just witnessed.
So the question, though, is you looked at the technology, you looked at what he talked about. They got into the weeds, right? They talked about the chips. They talked about how the cameras work. They talked about the reason and rationale for not using LiDAR. Did you listen to that and say, he's on to something? Or did you say, this is smoke and mirrors?
I've heard similar presentations from other companies for years, and it's interesting to hear their thought process and some of the details that they're doing. But that said, the idea of a level 5, the ability of autonomy to go anywhere and everywhere, is among some experts something that they don't see for a generation rolling out, let alone in the next 12 months.
The very next day, Tesla released earnings, and it was well known that the numbers would be weak due to the lower delivery numbers that were reported earlier.
It was an epic wait for these numbers coming out past the 5 o'clock mark, but Tesla did not make it on the top and bottom line. Let's start with the revenue. The expectation, $5.19 billion. Tesla came in at $4.54 billion, so a little bit light on the revenue side. On the EPS side of things, the loss was steeper than expected. Cash position for Tesla down from $3.7 billion to $2.2 billion in the quarter. Remember, Tesla was a company that had turned a profit for 2 consecutive quarters. As you can see, back down to a loss here.
By the way, we called it earnings. They're not earnings. It's just, it's losses.
Right,
in this case, they're financials.
During the conference call, Elon tried to explain that it was shipping and logistics that caused the lower delivery numbers and that demand was no problem.
But this rapid increase in overseas volume strained our logistics operation and resulted in over half of our global deliveries occurring in the final 10 days of Q1. This was the most difficult logistics problem I've ever seen, and I've seen some tough ones.
So Tesla missed delivery numbers in 1 quarter, and it was all doom and gloom, but not everybody saw it that way.
Is it the best suited company if you want to drive and observe quarter-over-quarter precision and performance? No.
It's the fact that the way he runs his company. You're comfortable with that?
Yeah.
None of the actions that he's done over the last year.
The way that it
funding
was
secured, I mean, what was that?
Okay, maybe he stepped out of bounds. My point is, you're getting caught up in the window dressing. I'm focusing on the main course. The main course is on the table. The choice for you, as a buyer or a seller of that stock, is do you want to eat it? If you get caught up in all of the stuff around the edges, maybe he may mistweet from time to time. My point is, who cares? Your job as a smart investor is to separate the facts and the news from the fiction and the noise. It does not change the fact that tens of thousands of consumers are buying that car faster than they can get their hands on it. It doesn't change that the minute you sit inside that car, your definition of what is expected is altered forever. And you wonder why every other car around you that you ever step in, that you may buy, doesn't have the same things that that car offers. So at the end of the day, whether you like his style or not, his substance is irrefutable.
Shortly after earnings, with $2.3 billion in the bank, Tesla made the call to raise $2.7 billion via stock and bond offering, even though Elon was reluctant to do so. And while that was seen as a positive, Tesla stock was trending down, all the way from 350 at the start of the year down to 200 by May. The media and the short sellers went after Tesla. Adam Jonas from Morgan Stanley, a well-known analyst, was quick to provide his worst-case scenario.
Adam Jonas, the analyst at Morgan Stanley, who put out this note this morning. You take a look at shares of Tesla, and we're going back over to the last 3 years, so you can see that we're now trading at 2017, 2016 levels. He says the worst case scenario, worst case, in case things really get bad in terms of China demand, etc., this stock could be worth just $10. He goes on to talk about a number of other situations that are impacting the company, including whether or not they've oversaturated the market when it comes to electric vehicles.
The saturation argument was a strange one, considering EVs had only made up several percent of new vehicles sold in the United States. And as the days went by, Tesla stock continued to drop.
The Tesla turmoil picking up speed after another bearish note from Wall Street. This time it was Citi saying $36 is the worst case scenario for the stock. Tesla's now on track for its worst month in more than a year, but one group on Wall Street has been cashing in on this move.
That's right, Melissa. The chorus of Tesla downgrades is music to the ears of short sellers. Those with bearish bets on Tesla have raked in more than $1 billion in profit this month. They've made nearly $4 billion on Tesla's declines year to date. And this comes after 3 consecutive years of losses for Tesla's short sellers as the stock price moved higher. For those longtime Tesla bears like David Einhorn, the wait appears to be finally paying off. Tesla has seen 12-month estimates for its stock price get cut a dozen times in just the last month. And bad news continues to trickle out, with Consumer Reports saying that Tesla's autopilot function raises serious safety concerns. Melissa.
Tim Seymour is one of those shorts. How do you think about the short position now?
Morgan Stanley's Adam Jonas did a call today, and I thought it was a great call because I think, ultimately this is a guy that has at times seen a bullish side. And what he talked about today, I think, is the most notable thing. He talked about a lack of demand.
The negative news on Tesla continued, with reports that Tesla's bond prices had collapsed, while Tesla would have to pay super high interest rates on any future debt, ultimately questioning their long-term survival. Although a few voices of reason were being heard, such as Tasha Keeney from ARK Invest.
Right now, Tesla's bonds are rated junk. You think they should be?
Without a doubt. They have they're rated junk for the right reasons. I mean, they continue to bleed a river of red ink. It's difficult to predict the future. It's an incredibly competitive environment they're in. They continue to miss sales forecasts and production forecasts.
Tasha, at ARK, this is one of your biggest holdings, Tesla. It's an important one for what you have. Why do you have conviction, and what do you think is going right with this company right now?
So at ARK Invest, we focus on innovation. So that's what this is. It's an innovation story. And I think right now people are misunderstanding that. When you look at Tesla and you think about sort of the most common bear thesis, it's that there's no demand for the vehicle. That's absolutely insane. I mean, we found out in the first quarter that over 69% of trade-ins for the Model 3, for the standard range version, were non-premium vehicles. So they're pulling in demand from other segments. They outsold their next best competitor by 60% in the premium vehicle segment. I mean, people clearly like these cars, and for a good reason. I mean, Tesla has a software advantage that no one else can beat.
During the annual shareholder meeting, Elon Musk tried to make it clear that there was no issue with demand again.
Model 3, last 4 quarters, is actually outselling all competitors combined in the US. And it's actually the best-selling car by revenue including high-volume cars like the Toyota Camry and Honda Accord. We're about the 4th best-selling by numbers, but the highest selling by revenue over the past year of any car in the US. So that's remarkable that an electric vehicle is the best-selling, the highest revenue car in the country. I think 10 years ago, nobody would have believed it. And thanks to the hard work of the Tesla team, this is a result. It's great.
Elon also highlighted the rapid progress of the new Chinese Gigafactory.
And then we're making good progress on the Gigafactory in Shanghai, but the shell of the building is basically done at this point. I think this might be it's the fastest large factory construction that I've ever seen. And maybe there's something faster, but I'm not aware of it because it was amazing. And then Gigafactory Europe. As you can see, we've made great progress here. We're still looking at what the right place is to put Gigafactory Europe. Hopefully we'll make that decision towards the end of this year.
Again, why would Tesla be announcing these new factories if there was a demand problem? And yet, Tesla stock drops further to $178 or $35 split adjusted.
Tesla shares careening with the company stuck in a quagmire of skepticism around its production goals and its own CEO. This despite continued assurances from Elon Musk that demand for Tesla vehicles remains high and the vehicle maker will still meet its steep production and delivery goals.
And speculative.
Did you cover your short?
No, I'm actually rolling down puts right now, which I think makes sense considering the volatility in the stock. And I actually did that today. I went from 175s down to 125s. And Carter's work on the technical side is always great. And technicals are a read. But the story here is about fundamentals. And to me, if you think about
there are no fundamentals. There are no fundamentals.
I'm sorry?
There are no fundamentals.
Okay. So spoken as a chartist, there are no fundamentals. But ultimately,
they have no profits. So what are the fundamentals? It's just a dream.
Okay. Well, then.
So there are no fundamentals. There's no valuation. There's no price to book. What is it? It's a guy with a tent who makes cars in a tent.
He sounds like he's talking my book right now. So I agree with that.
In the next episode, Tesla breaks the internet while the war between the longs and shorts continues. So I hope you enjoyed this episode. As always, all content is for educational and entertainment purposes and not financial advice. So until next time, I'll see you guys soon.